For the first quarter of 2013, the highest retail activity thus far has been in the 28th Street corridor by Woodland Mall and Center Point Mall, Alpine Avenue, Knapp's Corner, Rivertown Crossroads area, and then also downtown Grand Rapids. Around the Woodland Center Point area is the demalling of Center Point Mall, where it is now becoming more of an outdoor lifestyle center. No interior corridors. We've just seen the recent opening within the last couple of weeks of the new TJ Maxx and Home Goods store, first to West Michigan. Around Knapp's Corner, we've seen the addition of Firehouse Subs, first store within the marketplace in Grand Rapids. And then we move over to the Alpine corridor, which we are seeing increased demand from retailers wanting to go there, but limited availabilities for them to find. So we are seeing some new construction that's going to start happening on the northern clip of 4 Mile Avenue area there, where there's a new retail center going up and it is already 100% pre-leased. In the future for the retail world, what we're starting to see is the Nationals coming back to Grand Rapids, signing longer 5 and 10-year deals, which we haven't had in the last 3 or 4 years, and the ability for new construction to start happening because the available properties out there are becoming slim pickings, and the national retailers want to be at Main and Main, and for that they're going to have new construction, which is going to get us higher rates in our market.
The West Michigan office market continues to show signs of growth and strength in the first quarter of 2013. The downtown CBD of Grand Rapids continued to lead the pace in the region with about a 21% vacancy rate. Buyers are still active in the market and there's still a strong interest for office property as an investment. However, given the trade of hands, particularly downtown, of many of the buildings, supply is on the low side. With lower vacancy rates and the tenants' appetite for quality, new construction is planned and underway. For example, there is a 25,000 square foot building being constructed next to the Metro Clinic on Cascade, as well as a new mixed-use development on the edge of downtown that's going to contain approximately 60,000 square feet of pre-leased office. This is the 9th straight quarter of positive absorption for the region. And with little new product coming down the line, we anticipate vacancy rates to continue to decrease and absorption to continue to increase and rates to continue to increase as well.
The first quarter of 2013 in the industrial market in Greater Grand Rapids saw a slight slowdown from the frenzied pace that we saw at the end of the fourth quarter of 2012. Many transactions were done at the end of the year due to a lot of the tax changes that people anticipated coming up. So January and February were a little bit slower, but that's certainly not a reflection of buyer and tenant activity in the market. For the first quarter of 2013, we only saw 37,000 square feet of absorption, which is a dramatic decrease from what we saw in the fourth quarter. However, this is primarily due to the fact that almost all of the good Class A space in the market has already been taken up. Buyers and tenants are struggling to find good properties that fit their needs. So deals are becoming a little bit harder to find. Folks are considering buying land, considering new construction. We expect to see deal volume pick up again in the second half of the year. In the first quarter of 2013, the Grand Rapids industrial market reached an all-time low vacancy rate of 7.1%. That's the lowest rate since we began tracking statistics in the mid-90s. This points to the incredible growth and health of the overall industrial economy in the West Michigan market over the last 3 years.